from standpoint of some questions. The cost flow method that often parallels the actual flow of goods is what? Is going to be FIFO. Good. Okay, let's take a look here. In a period of inflation, the cost flow method that results in the lowest income taxes is what? You better not miss that one if that's on the test. Life is LIFO, right? Okay. Okay, good. Let's see. Let's come back to this. Okay, what I want to do at this point, we'll come back to these, but I want to go to some of the multiple choice questions. Okay, some of the quiz questions. Which one do I want to do first? You want to do Netta Shutters, or you want to do Chapter 5 quiz with answers? You took too long. Okay, so we're going to do this one, okay? And I know you have like, you're like, oh, no, I want to do Netta Shutters, but come on now. Okay, this is Chapter 5 quiz. Keep going. Oh, you got it? Okay. Okay, ready? Does this look familiar? So we have our first year of operations, and we purchase our entire inventory in what? 3 batches, 3, 4, and 2. What's the total? They bought 9,000. And how many did they sell? They sold 5,000, didn't they? So this is almost like that question, just a little bit different, right? In the other one, we sold 4,000 and ended up with 5. Here, what? We sold 5,000 and we're going to end up with what? 4,000, right? Now, I couldn't understand when I gave this test to one of my classes. I had given them that same example that we just studied with, and then this was their test. And everybody went, oh, you really changed the problem. I did? All I did was change what got sold. Everything else was exactly the same. Okay? Anyway, so let's go ahead and let's do weighted average first. Who wants to help me with weighted average? You want to help me with weighted average? Okay. 425, good, times 3,000. I'm just going to write it all in here. 4,000 times 325, you say? I mean, times 425? Gives me what? 3,000 times 425. Gives me what? 12,750? Okay, good. 12,750, right? Okay, good. Next one? 4,000 times 450. 18,000. Good. Then the 2,000 times the 475. 9,500. Nice. Okay. Now what do you want me to do with those? Add these up, and you get a total of 40,000 what? 250? Is that right? Okay. 40,250. Okay, now what do you want me to do? 40,250 divided by 9,000, you say? Okay, good. And that gives me what? 4.472222 on into infinity? We'll just do 3 twos. Okay. All right, good. Now what do you want me to do? They want to know the cost of goods sold. Take that number, multiply it by the number of items sold, 5,000, right? And that gives me something close to this 22,361. Good. You want to do the ending inventory? The next one? So now I got 4,000 left in ending inventory. Good. Good. And that gives me what? 8889 there, give or take. Right? Okay, good. Very good. You want to keep going to the next one? Okay, let's go ahead and let's do that one. Cost of goods sold now using FIFO and then ending inventory using FIFO, right? Okay, good. Okay, I sold 5,000, so I'm going to take 3,000 from those right there, right? Okay, good. 3,000. Those get sold first. That's what, 425 ones? That gives me 12,750. Good. 2,000 from batch 2 at 450 each. That's what, 9,000? Right? So how many are we left here with now? 2,000? So there's, huh? Right? Yeah, okay, so there's 2,000 left there now. Okay, and so for our cost of goods sold, though, what do we have here? 21,750. That number right there? Beautiful. Want to do want to do ending inventory for me, Amy? We have 1,000 from batch 2. Did I make a mistake up there? What did we do wrong? Did I do it wrong? 2,000, 5,000. 5,000 got sold, right? Was it 5,000 got sold? 2,000 left from batch 2? Okay. 2,000 from batch 2 at what? 450? So that's 9,000? Okay. And how many from batch 1? How many from batch... from batch 3, sorry. It's all those are left, right? Okay, from batch 3. Sorry, I slipped into a LIFO thing here. 2,000 from batch 3 at what? 475. 475. How much? And that gives me the 18,500. Good. You mean like my goods available for sale minus my cost of goods sold, you're saying? Will equal ending inventory? Let's try it. 40,000 what? 250 minus the what? Cost of goods sold, which we had calculated as 21,750. Hello? Gives me 18,500, you're saying? Okay. That'll work too. What I had available minus what I sold or minus what I have left means I must have sold the rest, right? Okay, good. How about cost of goods sold using using LIFO? Who wants to do this one? Person who made eye contact for more than 3 seconds. Oh, you want it? I got people beating each other up over this one. I'll let you do this first. I'll let you do the ending inventory. You're going to get the first one on the next question, on the next test. Okay? So number 5 is all yours. So we're looking for cost of goods sold using LIFO. How many did we sell? We sold 5,000. Cost of goods sold. So which ones do you want to grab first for the solds? Batch 3, there's 2,000 there, right? So I'm going to pick up 2,000 at 475. $9,500, you say? Okay. Okay, good. Then what, I sold a total of... So now I got to go to batch 2, and I'm going to take how many units from there? 3,000, right? Because what, that 2,000 I put in there was from the last problem, right? That's from the last problem? Assuming this stupid thing's going to let me erase it. Okay, so now of the 4,000 that are there, because I need 3,000 more, I'm only take 3,000 of those to bring me to 5,000, right? So I grab 3,000 of those. Okay, I hear you, but the computer doesn't. For some reason, it's going to go ahead and lock me up here and not let me get down there. Ugh. I got to talk to it? Gently or in a mean way? Come on, computer. If you don't work on no ice cream after class, no milkshake for you. Was that gentle? Or was that mean? Okay. So you wanted me to talk gently, and it worked. See? Okay, so what was it now? 3,000 from batch 2, right? Because there was 4,000 sitting up there at 450. $13,500. Okay. So do I have my 5,000 items sold? And so I add those two together. That gives me what? 23,000 even? Okay, good. All right. So now we want to get ending inventory, right? The remaining 1,000 units from batch 2, because we went up there and we had 4, and we just got rid of 3, didn't we? So we only have 1,000 of those left now? Okay, good. So 1,000. I'm just going to do it up here, so this stupid thing. Well, yeah, 1,000 times what? Times 450? It's 4,500. Okay, good. This is for ending inventory, right? And then what? Now we get those 3,000 units. 3,000 units from batch 1 at what? 425. Good. And those are going to come in at 12,750. And so I add those together. What's that? 17,250, you say? Okay. And let's see if it'll let me scroll back down properly. What number was that? Number 6. So 17,250, right? Okay, good. Good job. Don't worry about this question. This was something that I used to make my classes do that I learned better. Not to ask. Don't worry about this. I don't want that on tests anymore. But I do want you to be able to answer this one. So, Ohlone, sir with the Ohlone College, sir, what's your name again? Jeremy. So what's the gross profit if I use FIFO? Okay. Where'd you learn that trick? In Hayward? Okay. So $5. You're sitting too close to them Raider fans now. They're starting to have an effect on you. Okay, so it's $5 is the sales price minus what? Minus the cost of goods sold. Very good. And the cost of goods sold, excuse me, up there for the FIFO question was what? 21,750? Is that what it, huh? Well, we need $5 times what? Times how many units did they sell? Times 5,000. So what's that? 25,000? So 25,000, and then you're saying the cost of goods sold from the FIFO problem was what? 21,750. You had to pull up from that question, right? And so that gave me what? 3,250. Okay, good. Can you do it for LIFO? Sales price? Sales price is still 25,000, isn't it? Good. But now we're going to do what? Subtract the LIFO cost of goods sold, which was 23,000. Periods of rising prices, right? So notice LIFO is going to give me a smaller gross profit. What, 2,000? Smaller gross profit, which will translate into a lower net income, which translate into lower taxes, right? And since we typically have rising prices, eventually over time all prices will go up, right? And so we go ahead and most companies that have a perceive a tax benefit will use LIFO. Okay, good. You want to take the break or you want to keep going? Break time? Okay. Okay, let's go ahead. Let's take the break, guys. Let's reconvene at what? What time does this class get out? 8:45. So let's reconvene at 7:45. That'll give us a full hour, right? We'll try to knock out some more material. 10 minutes? Okay. Just the test. So we're going to look at lower of cost or market here. And lower of cost or market is a pretty easy concept in that the name is very descriptive of what we need to do when we do lower of cost or market considerations. You're welcome. When we do lower of cost or market considerations. Okay, so what happens? We purchase an item for $5,000, an inventory item. The value of that inventory item drops down to $4,000. FASB says that we will need to take a loss and lower that item down to that lower market in that situation, right? Bought it for 5, market is now 4. If what? If we buy something for 5 and the market goes up to 6, we still carry it at 5, right? Lower of cost or market, whichever is lower, that's what we carry our inventory at. Okay, so it's just this easy, guys. Cost is 60,000, market is 55. What should we carry it at? 55, lower of cost or market, right? Okay. Okay, good. What happens here? Satellite radios. Cost is 45,000, market's 52. What should we carry it at? Stays at 45, the market, right? Okay. DVD recorders, please. 0 for these, right? Okay, but what? DVD recorder at what? 48 cost, 45 market, we carry it at? 45 market, good. DVDs, 0. Okay, what? 15, 14, we carry them at what? 14, right? Okay? It's just that simple. If you're waiting for deeper meaning, stop. There is none, okay? Rule of conservatism says what? Take the loss immediately, right? Okay? Okay, good. Presentation on the balance sheet. Inventory is classified as a current asset. Inventory is what? A current asset, right? And we know that cost of goods sold is on the income statement. Please, we're not children, right? We're not babies here. Okay? Right? Okay. Okay, good. Now we come over and let's do an analysis here of inventory. Okay? Let's say you want to know if a company is able to sell its inventory. What sort of an analysis would you do if you're trying to figure out that a company's trying to sell its inventory? Well, you might want to figure out how many days an item stays in inventory. And so what you're going to do is you're going to first figure out how many times do they turn over their inventory. The inventory turnover is your cost of goods sold divided by your average inventory. Average inventory is your beginning inventory plus your ending inventory divided by 2 will give you your average inventory, right? Okay? Then what? Once you have the average inventory, you divide that into your cost of goods sold. That says how many times you turned over your inventory. Once you know how many times you turned over your inventory, if you want to know how long something stays in inventory, you divide that by the 365-day year, and that will give you the amount of days that items have stayed in inventory. So let's just use an example, and let's say that this company has what? Has 36,318 of beginning inventory, 32,713 of ending inventory. They divide that by 2. That gives us our average inventory, right? Okay, then what? Then you divide that into your cost of goods sold, and that means they turn their inventory over what? 9 times, right? So if our average inventory was, what is this 36,318 plus 32,713 divided by 2 anyway? Huh? 36,318 plus 32,713. Don't worry about the zeros we're dropping here. Divided by 2 is what? 35,000 what? 515.50. Okay, good. So that means that on average, they had $35,000 worth of inventory, didn't they? And if they sold what? $315,000 worth of merchandise, that means that what? 35 times they sold out their whole inventory, didn't they? Because they averaged 35,000? Not 35 times, what did I say? 9 times they sold out their whole inventory, didn't they? Right? Okay, that's the inventory turnover. Huh? That looks about right. 35,515 divided by 315 is in... I don't care. It's in the ballpark, okay? It's around 9. Okay, I don't care. I don't care. It's about 9 times, isn't it? I'm not sitting here trying to get this number perfect. The bottom line is what? They turned that inventory over about what? About 9 times, didn't they? Right? Because if you have on average 35 and you sell 350, it's 9 to 10 times, isn't it? Okay? Now, since they turned it over 9 times, and what? There are 365 days in the year. If you take this 365, divide that by what? 9.1, don't you get this 40 days? If I turn my inventory over 9 times and there's 365 days on average, stuff stayed in inventory for about 40 days, didn't it? Is this good or bad? If this is a sushi restaurant, don't eat there. This is really, really, really bad, okay? If this is Walmart, I don't know, I don't go to Walmart that much, but I usually, buy stuff that's probably going to be on like a 40-day cycle, right? So it sounds about right for them to turn things over every 40 days, right? If I'm commercial real estate sales company or something, well, then what? Then my stuff might stay in inventory a little longer, right? I mean, 40 days would be phenomenal performance, wouldn't it, if they could actually sell inventory of real estate in 40 days? So we might expect a longer for real estate sales or something, right? Okay. Question? This allows us to evaluate the company? Turnover, well, it depends on what you're talking about. If you're talking about Apple turnovers, there's really good things that go well with a cup of coffee, okay? But if you're talking about inventory turnover, it means what? How many times we what? How many times we turned over the inventory? How many times did we sell out the inventory? That's maybe another word you could use. So we sold out, although we would never let ourselves sell out because what? This is another thing you could use this analysis for. About every 40 days, we better be getting another shipment of stuff, right? Right? Because in 40 days, we're going to be out. So what happens? We could use this analysis, and we probably wouldn't wait 40 days. But we know by about the 25th day, we better be getting another shipment of them, crackers that everybody likes, right? Because if we don't, we're going to run out of those by the 40th day. And what? You could do this by product, right? And people are going to go and say, what? They ran out of crackers again? I'm never coming back here to run my crackers. I'm going over this. That's the guy leaving, and we're never going to see him again, right? That's me going to Lucky's for avocados. Okay, whatever. So what? So if you're sitting there and what? You stock out, that's a problem. By the same token, you don't want to order stuff every 10 days because now what? Now you got crackers falling off the shelves in the aisle. People are stepping on them. Oh, sorry. Why is it in the aisle? Hey, Joe, take some of these crackers home. Can you believe it? They're falling into the aisle. Okay, whatever, right? And so what happens? We don't want to order them sooner, so we'll find a perfect point to order these. Now, we could turn this as a very rough formula. If you start taking like quantitative business methods and that when you transfer to the universities, they'll make you take more sophisticated means. They call them just-in-time inventory methods, in which you can use a calculus type formula to figure out what the economic order quantity is, when you should order, and how much you should order at any point in time. But this gives you a ballpark idea of it, doesn't it? As well as an analysis. If you're looking at a company and you're saying, 40 days are the amount of time that things stay in inventory. And I look at every other company in this industry and it's only 20 days. What's wrong with these guys? Why are they 2 times slower than everybody else, right? Price too much, or maybe their stuff is lousy. Or maybe somebody's invented something that's better than that stupid thing that used to be so great for them, right? Whatever. You start uncovering a lot of things through this. Okay? Okay, good. Gross profit method. Okay? Oh, I shouldn't do that. Makes you think. It seems like such a waste of time for you guys. And I can't. Never mind. Shut up, John. This is a really cool method, okay, to account for inventory. All right? So let's just go ahead and let's take a look at this. And all you do with the gross profit method is we'll give you the gross profit percentage for the inventory. Let's just go back. It gives us a means to estimate our ending inventory. That's what we're trying to do. We're trying to estimate our ending inventory using gross profit method. So what do? We sit here and we have to take our net sales, and then we take our estimated gross profit, and they tell us in this problem that last year their gross profit was 30%. So if last year their gross profit was 30% and this year their sales is what? Is 200,000, then that means that they think their gross profit this year will be 60,000, right? Sales now minus gross profit equals my cost of goods sold, right? The complement of sales minus cost of goods sold gives me gross profit. So sales minus gross profit gives me cost of goods sold. And I then just sit there and I say, okay, my beginning inventory plus my purchases for the period gives me my goods available for sale less my what? estimate that I just came up with for my cost of goods sold. So I estimate my ending inventory is what? 20,000, and I base that off of retail. Okay? Okay, gross profit. Okay, so with that, what I want to do is go back and let's take a look at a couple of those Chapter 5 quiz questions that we hadn't finished from before. Yeah, we are. Don't scare me. Yeah, we're recording. Okay. Okay, good. I don't want all my genius thoughts to be lost, right? Okay. Okay, so let's go ahead and let's take a look at this one now. And this is trying to get the days in inventory, isn't it? Okay. Who wants to try this one?
I'm not going to do 12.
Yeah, okay. You want to do 12?
No.
You want me to do 12? Okay, you got it. All right, so what happens? This Switzer Inc. has 5 computers, which are part of their inventory for 2 years. Each computer after 2 years, these computers are worthless. Come on, okay? But we'll humor them, right, and pretend like you could carry computers in inventory for 2 years and have any hope of selling them. But anyway, let's go ahead and let's take a look at this. And so we have what? Each computer costs $600 and originally retailed for $9. A statement, that's the financial statement date. Each computer has a current replacement cost of $400. So do you want to value these at 6, 9, or 4? 4, right? Lower cost or market. And our markets come down to 4. So 400 times how many computers? Times 5 computers gives me $2,000. Okay. Question? Okay, good. How about this one? Who wants to do 13? How about this side of the room? Well, you carried your side for a little while there, but how about the middle? You want to do this one? Okay. Go ahead. That's all I ask is that you try. If you try in here and you get it wrong half the time, that's a 50%. You take that home and you get it right 3/4 of the time, that's a 75. You try it again for the practice midterm that we'll have, and you get them right 80%, that's an 8 out of time to that. That's 80%. And if you get it right on the test, that's an A in this class, isn't it? Okay? So go ahead, get started on that journey. Well, it's days in inventory. We just looked at this, right? Do I have to? You came in late. Okay, even better. Now you really got to do it. Now you can't stop doing it if I don't want to let you stop. Okay, so what happens? We got to get the average inventory first, don't we? Okay, so we take, just look right here. So we take the 90,000, right? Plus the 110. That gives me what? 200,000 if I'm not messing my calculation up here. Okay. 200,000, and to get the average, you divide that by 2. I mean, that's just how you get the average, right? Okay. And so what happens? We get the average for the year anyway. That's how you get the average. And that's 100,000. Right? Okay. And so then what? Then once we got the 100,000, what do you want me to do with that? Good. We're going to divide it by the cost of goods sold, right? So 500,000 divided by what? 100,000 means that this company turned over their inventory how many times? 5 times, right? This is a little clearer now about this turnover, sir. What's your name, sir, that asked that question about what does turnover mean? Huh? Andrew, you said what does turnover mean? Now you can see it a little more clearly with this number that 5 times they had to replenish their inventory, didn't they? To be able to sell 500,000? Because it on average was hovering around 100,000 throughout the year, right? Okay, so if we turn an inventory over 5 times and there are 365 days in a year, that means that what? Every 75 days, right? Or so? 73 days. Okay. Every 73 days, we must have had to sell out our inventory and replenish, and maybe we started ordering more inventory at about 60 days, where we don't wait till the 75th day, right? Or if you're an analyst, you could look at this and you can say, hey, 75 days, and everybody else in this industry is taking 120 days to move their inventory because it's something that's hard to sell or something, or it's a down market in real estate. Or 75 days for a restaurant? Forget about it. That's the bad news, right? Just depends on the company, I should say, right? Okay? Okay, good. Oh, huh? That's it for that one. But we still have another midterm, don't we? What is this now? I can close that. Okay, we'll close the program then. Well, don't recover my information. Just let it go. I mean, since you messed it up now, you don't need to recover anything. That's me talking to Microsoft Word. So I'm looking for what? This one? Now it's going to go through this whole thing and say, do you want these files back? We found them. And it's going to give me everything but what I want, which is this. Okay. All right. So let's look at some of these now. And these questions are pretty similar to what you can expect to see on your exam. You want to do these now or later? We could save these for later if you've had enough inventory. Now that I built it up so much, we have to do them now, right? That was the dream. That was the dream, but that's not really realistic now, is it? So let's just do this and get it knocked out. Because we don't really have the appropriate time. We're not going to do that other chapter. So let's just do this like this. What am I trying to do here, though? Home, view, zoom, page width. Okay. Let's just do this. Okay. And I'll do the first one. Then I'm going to start to ask for some help. Okay. So let's just go ahead and let's take a look at this one. And they're asking us here what? The cost of goods sold. Hello? Okay. So since they're asking me cost of goods sold, let me see. I think I'll get red here. And maybe I'll do this heavy blue. Okay, so they're asking me what? Cost of goods sold? Okay, so they're asking me cost of goods sold, and they tell us that there are 45 units on hand. Okay, and we're using specific identification. And ending inventory consists of 10 units from each of the 3 purchases. And so they want us to consider the cost of goods sold, right? So if we want to do cost of goods sold, and each inventory includes what? Each purchase includes only 10 items left. If there's only 10 items out of a purchase of 60, that means I must have sold what? 50, right? Okay, and if they're telling me what? There's only 10 left after a purchase of 30, that means I sold what? 20. And if they're telling me that there's 10 left after a purchase of 45, that means I sold what? 35. Good. I go ahead and I do the extensions. Does that give me the answer? Okay. Right? Okay. Now, just for fun, I went ahead and I did the ending inventory down here. Okay, and they tell me in the fact pattern what? There were 15 units from the November 1st inventory. So I know that those are all still there, aren't they? 15 times and I just picked up the $8. Gave me that $8, right? So that's for that one. And then they told me that there was 10 units, I should say, each for those others, didn't they? So I just went ahead and I said, okay, that means that the ending inventory got to be what? 375. The question didn't ask that. I just decided to go ahead and calculate it, right? Okay? Okay, good. Now the company uses what? FIFO, and they want us to do what? Ending inventory, and they tell us what they bought and then what they sold, right? Okay, let me erase some of this if I can. Will it let me erase it? I don't think it will. Oh, okay. Well, thank you. Okay, so let's go ahead and let's see if we can figure this thing out now with some of this stuff, some of this junk in the way, so we can see what went on here. I hope I haven't erased so much that even I can't figure it out now. But what's going on here? Okay, so we want to know the ending inventory, don't we? On a FIFO basis. And so what happens? They have these 10 units in beginning inventory. They have purchases of 60, and then they sell 40, don't they? Right? So when they sell those 40, what are they going to do? They're going to first sell all of these, aren't they? Right? So they're going to sell what? What are we looking for? Ending inventory? Okay, but we got to figure out what's gone here to get ending inventory. So all of those 10 are gone, aren't they? Okay. Then what? Then they go ahead and they sell 30 of these, right? So there's 30 left. First in, first out. Did that give me my first 40? Right? Okay. Then they buy 30 more and they sell 28. So if we're doing first in, first out, which one should we grab first? We grabbed 28 of those, so there's only what? 2 of those left now, right? And we sold all 28 of those using first in, first out. So if you look over here then, in our ending inventory, we've got what? We've got 2 of these 92s. And we've got what? We've got all 30 of these 95s. Right? Right? You think that textbook's going to start talking to you now and explaining this to you?
No, I was looking for a note that I put in my backpack.
Oh, I thought you were looking through the textbook trying to see if it's going to start talking to you.
This is only
Oh, okay. Is there a question on this? Okay. Question? No? How about cost of goods sold? Who wants to talk me through the cost of goods sold? Guys, look, tuning out, if you're sitting here and you're saying, just close your eyes and this will all be over in a minute. I mean, that's not what's happening here, okay? I mean, the point of this is to have your eyes open and understand. And if you don't understand, this is the time to go, Doc, every time I do this, I got a pain. I don't know, man. I'm going to think maybe I'm dying. I mean, you don't go to the doctor and say, well, I went to the doctor, but, in the way into the doctor's office, my brain fell out, but I didn't tell him. I mean, How did I get 30 that came from this sale, right? From this sale when I left was 30? When I was left with 30 before I crossed it out, you mean? This 30 right here? Where I crossed it out later? Here, I'll just do it again. Let me just erase it. So it's easier to see if I erase it first. Okay, I guess it's erased now. Oh, please, wizard of the erasers. Okay, that's what I needed to do. Okay, all right. So what's happening? They said that they sold 40 right here, didn't they? Okay, so since they sold 40, where do you want me to get those 40 from using first in, first out? Where do you want me to get them from? Just talk me through it. Right, first in, first out. So I need 40, don't I? Okay, well, you asked me where I got the 30, and now you're answering a different question than the way I explained it. Okay, well, for the rest of the audience, I'll go ahead and I'll show them what we're doing here. So we went ahead and we got rid of the 10, didn't we? Right? Okay, so that's sold, and now what? Now we need 30 more to make it up to 40, don't we? Okay, so we go ahead and we sell what? We sell 30 of those, and so we're left with 30. That's where that 30 came from, right? Okay, and then the problem told me I sold 28, so I went up here and I sold all but what? 2 of those, right? Okay, and so now I'm left with what? I'm left with 2 at 92, and I'm left with what? 30 at 95, right? Okay, and that's how I got the, what? They asked me for ending inventory here. Okay. Any question on the other one? Cost of goods sold, where I just put it in there. They didn't ask for it, did they? Did they ask me for cost of goods sold? Oh yeah, I typed that in is what it was. The original problem didn't ask for it, but I just went ahead and typed it in. Did we do cost of goods sold? Oh, okay, let's do cost of goods sold. So cost of goods sold is what? I sold those 10 at 90, right? And then I sold these what? These 30 at 92, and then I sold 28 of those, because remember I ended up with 2. I sold 28 of those also at 92, didn't I? To get the cost of goods sold? Right? Okay. Okay, good. Who wants to do Pappies? ending inventory using LIFO? Go ahead, walk me through it. Go ahead. Yeah, you want to do it? Okay. Okay, good. Let's try it. So LIFO, right? So last in, first out. Oh, you know what? This one's kind of a hard one. I'll tell you what. I'll do this one, and then you can do. I'll do ending inventory. Then you can do cost of goods sold. How's that? Okay. So this one's a little bit harder. Let's just take a look. They tell me that what? I had beginning inventory of what? 10. The reason I'm doing it because it's got a little bit of a wrinkle in it. I don't want you to get stuck in the middle of that. Destroy your feeling that you understand this that you don't understand it when you do. Give you that feeling. So let's just look at it. Okay, and they start out with 10, and then they did what? Then they bought 60 more, and then they sold 40, didn't they? Okay. Now, at the point that they sell it, if you're using a perpetual inventory system, you have to debit cost of goods sold and credit inventory after each purchase and then sale, don't you? So at this point, even though they bought some stuff after this sale, they got to update the inventory record, so they have to go and grab those what? Those $92 ones? Because that's using the LIFO. That was the last that came in. Right? So they go ahead, and since they sold 40 of those, that means that there's only what? 20 of those left right now, right? Okay? Then they go and they buy what? They buy 30 more units. And so what happens? Now when they sell 28, they do what? They take the 28 from that purchase that they just had, don't they? Right? And so now there's only what? 2 of those left? And so since they're asking me ending inventory in this problem, it's what? It's the beginning inventory items 10. They didn't sell any of those, presumably, under last in, first out, right? There's 20 of those 92 ones left because after that purchase of 40, that was the only cost that was in there. I mean, after that purchase of 60, and then the only cost that was in there was that 40. When they sold them, they had to grab those 40, right? So there's 20 of those left. And then what? And then they bought those 30 more, and when they sold 28, they assumed that they sold all but what? 2 of those, right? And so we go ahead and we do the extension there, and we get this 190. And you add that up, and that's the ending inventory. Right? So that one's a little trickier. That's why I didn't want to get you stuck in the middle of that one, because of that wrinkle of the purchase coming before the next sale, right? Okay? Okay, good. Now, if you want to do cost of goods sold, it's really the complement of this. It is what? It's 40 of those that got sold right there, and then what? And then the 28 of those that got sold, right? Right? Okay. Okay, good. Let's see if there's another one we can do. Oh, boy. Who wants to do this one? You want to try this one? No, why? This is an easy one. You can do it. It's easy. Sorry. I'm just kidding. Come on, guys. This is a piece of cake now. It's lower of cost or market, isn't it? So you pick up the lower of the cost or the market. Hello. Okay, and so what happens? You sit here. What's lower? What's lower? The 19s. Okay, good. What's lower here? Well, they're the same, so we got to pick the 45. What's lower here? 59. What's lower here? 36. And then you just simply do the extensions, don't you? Down here, taking these numbers. Okay, now this problem, guys, I won't give you one like this on the test because this is a full-blown problem, but I thought it was a pretty good exercise, so that's why I grabbed it. Okay, you'll have obviously multiple choice question, right? Okay, good. We're going to do that next time. We'll come back to this one. I'm not making you do that now. I think that's why I put that smile there before. Okay. Let's see here. Don't save. Yeah.